everyone, how you guys doing? What's going on? I'm sorry I'm not playing disco. I just want to make a fast video about the market. I'm gonna start with the US dollar and my assumption that we finished wave 2 right here, and we're going for 1, 2, and 3 later on. So this assumption is still intact, where we concluded wave 2 right here. So wave 1 is not right here, and this is the conclusion of wave 2 and wave 2. And some people call it C, I call it 3. It's okay. So conventional technical analysis now. We're still in the pipeline formation, and the moving average is flattening now, and it's about to have a bullish crossover between the 10 and the 20-day moving average, which is usually results in up move or down move sometimes. It is usually it results in sometimes an up move, sometimes a down move. It depends on the time frame. Right here resulted in an up move. Right here it was sideways, then down move. So we will see. So the assumption is still intact. 1, 2, and the pipeline formation for the Bollinger Band. There is a bearishness here in the stochastic, yet the MACD is still doing fine, and the RSI is doing wonderful, as a matter of fact. So this is the dollar. So let's talk about the put to call. The put to call now, the thing that I noticed throughout the years, the 20-day moving average bull streak crossing over the 50-day moving average, usually 100% of the times results in the last 2 years results in major move. So now it could be expected anytime, according to this finding of mine. It was true during the flush in Feb or March. It was true in October 2019, August 2019, and also May 2019. So now we're putting this to the test. So the VIX is forming a bullish wedge, and it's at the 20-day exponential moving average. It found support in buyers, and the bullish wedge is in the process now. So it's not ready for it's not breaking out yet, and it's 1, 2, and 3 according to the Elliott wave. And also the MACD, but the MACD is getting bearish here, and the histogram is going down, but we don't know what's going to happen. But most likely it's 1, 2, and 3, and we will see nothing, no confirmation yet. So we talked about the VIX, the dollar, the put to call. Now we talk about the Elliott wave count for the Dow Industrial. It's still intact, where we have 5 waves down, 1, and we have a complex correction, and there's no violation of ABC2. This too got concluded after triple negative divergences, and also measured move. 127 of this move is right here, and 121 of this move is right here. So it was a place where the sellers gather as a measured move and negative divergences, and qualified for a second wave. So it might be wrong. Corrections usually are hard to figure out. Now this is a conventional technical analysis in the Dow Industrial. I still can notice and easily see the distribution days with the volume right here. It's definitely more than the accumulation. And usually, as I said, smart money said you could find the footprints of smart money. As I stated, it's just smart people selling. And this is the volume for that, and the days. So supposedly we are smart money is more sellers now on the seller side, and also the Bollinger Band is sloping down, which means if the price go down, it's not going to provide support. So what provided support now, and what's providing support to the market right now, is an older price memory, which proved very strong right here, these 4 days, and right here, and also the 50-day moving average. The 50-day moving average is right here. So also in the conventional technical analysis, we're forming a mini head and shoulder. Left shoulder, head, right shoulder, still in the formation now. And there's a mini 1, 2, 3, supposedly in Elliott wave. So we'll just wait and see. We don't know what's going to happen. But we are definitely in a bearish bias, and it's extremely obvious. And also now the 10 is almost in a bearish crossover, and with the 20-day moving average. Usually it's a lagging indicator. So if it's very close, that means the effect is extremely close. You could argue that this bearish crossover between the 10-day moving average and the 20-day moving average, you could have established a short position here because it's a lagging indicator, and you could have taken that, making that much money here. And this supposed bearish crossover that didn't take place, it's a failed one. But you could have expected this one. I don't know. Now this is not. You cannot justify that one. But this one you can justify, this flush, even though the bearish crossover didn't take place. But because it's a lagging indicator, it could have given you a hint here, plus the bearish flag right here. So this 10 and 20 is giving us a hint that a move down is very close. And once you break this bad boy, that mini head and shoulder would be in effect, and we'll take it, the measure move the price action to at least to this level right here. Okay, so this is for conventional technical analysis. Now this is the weekly time frame for the Dow. It had an almost bearish engulfing for last week with high volume. Today, this week is also a red volume, but it's lower than last week, and it found buyers close to the 10 period moving average, but there is no trend here. So there's an indecision. A break below the 10 period moving average in the weekly will confirm the downtrend, because at this time you will have the head and shoulders in effect. At the end of the day, we really don't know the future, but our bearishness is justified by Elliott wave, and also by price action, and also by the trading volume, and also by this mini head and shoulder, and in addition to the bullishness in the dollar, and this theory of mine in the put to call, and also in the VIX. I wish you guys the best. I don't have energy to scream.